All right, so we're back with the server, and today's lecture, we're with Theos as well. I'm gonna link his channel down in the description, co-owner of Riptide. So if y'all want to check out his content, it's gonna be in the bio. But today, me and him, we're gonna be talking about IFVGs, also known as inverse fair value gaps, which, in my opinion, and honestly, I think it's pretty objective that this is the best PD array because it gives us the opportunity for entries and much more than that, which we're going to be reviewing in today's lecture. So the topics of this lecture are going to be what an IFVG is, how to spot it, what it tells us, why it's so good, and when to use it. So we got a lot to cover in this one just because I feel like there's so much that goes with IFVGs. There's a lot of information to them that you got to know. So first thing we got to talk about is what is an IFVG. So you guys should know what a fair value gap is. Again, 3 candlestick pattern where the wicks do not overlap with the middle candle. So basically all an IFVG is when we have a fair value gap that gets a closure above or below it. So in this example, we have a bullish fair value gap. And rather than this fair value gap holding up and respecting, we close below it, which turns this regular fair value gap into an inverse fair value gap. So instead of this being a bullish PD array, it flips to a bearish PD array. So how do we spot fair value IFVGs? So first thing you want to do is look for a regular fair value gap. So in this picture, we have a bullish fair value gap. Now, if you're anticipating for a reversal, you want to wait for a full closure below the fair value gap. So the wick is here, so the fair value gap ends here. So you'd want a candle closure right below here. And as you see, we end up getting that later where we get a full candlestick closure right below that. So that turns our fair value gap to an IFVG. And that is sort of an indication of a flip in the trend. And that's exactly what IFVGs tell us. IFVGs confirm reversals and trend flips. So, for example, in this picture, prior to this, we were bullish, and then we formed that IFVG, which is sort of an indication that we're going to go bearish. So, I like to think of it as sort of the same thing as a break of structure or a market structure shift. And in my opinion, it's basically the same as them. Like they both have kind of the same power in a way, because if we were truly bullish, this PD array would have held up, but it didn't. We closed fully below it, and that's confirmation that order flow has flipped. And another thing that you can use it for is for entries. So for example, if we get that full closure, you can wait for a retracement into it. So like we closed below it on this candle right here. So just like a regular fair value gap where you'd want to enter at the top, instead, since we have an IFVG, you'd want to enter at the bottom of it. So if you see the bottom of this box right here and how we go back into it, that could be an entry for you. And I just want to include one more thing about IFVGs, and this is a very underrated tip. So it doesn't always apply, but most of the time when you're looking at an IFVG and you want to see it become inverse, you want to look for a V-shape inversion. What I mean by V-shape is a very aggressive inversion. So like in this example, we have a very good one right here. We go up, form this fair value gap, and then we very aggressively displace below it and close. So if it looks like it formed a V-shape, that is a good indication that it is a strong IFVG. And as you see in this example, it held up pretty well. So why are IFVGs so good? And in my opinion, superior to any other PD array. Again, IFVGs can be used for many things. So a confirmation of a flip in structure, as you see here, we were bearish prior to this. We get that IFVG, and that is our confirmation that we were flipping bearish. And it can also be used as an entry. So rather than waiting for a market structure shift, you could have just entered off the IFVG, gotten a much earlier entry, made more money, it just works out way better. Now, finally, we're going to go over how you should use it. So you can look for an iFVG to form after we sweep liquidity or hit a key level, such as some type of high time frame PD array. And after you start anticipating that reversal, you can wait for an iFVG to form and then enter off the closure of it or a re-entry into it. So since it closed here, you could have entered on this leg right here, or even at this closure or this candle re-entry into it. I have another tip for iFVGs that I just want to go over before I pass it on to Theos to go over some chart examples. And that is iFVGs pair really well with accumulation, manipulation, distribution, or power of 3. You can base a entire model just off of that. And it also does work very well for market maker buy and sell models. So that's all I have to go over. I'm going to pass it on to Theos now. He can do some chart examples with you guys and share some tips, whatever he wants to do.
What's up, fam? It's Theos coming at you with the charts. Let me go ahead and share the screen. Make sure we are sharing TradingView. There we go. So after knowing what an inversion fair value gap may be, how can we truly start to spot them on the charts? Well, as Kev already taught us about fair value gaps and volume imbalances, that's just key overall. So we have our fair value gap originally with the volume imbalance here. And you could see the market is being bearish in the moment. Trades back up to it, respects. But it's also now generating this sell side liquidity. Because in the picture of an inversion fair value gap, you're looking for an entry. And normally you're targeting a buy side liquidity pool and or an imbalance that was left. So you see buy sides up here, pretty prominent. I know Kev covered buy side liquidity. So market trades through the fair value gap. And as Kev already explained, that's creating inversion. And now we have to look for our entry. And we'll find entry points when we confirm by retracing back to the inversion before leaving. Retrace to, and you can see market dig lower, and you always have to focus on time. But I do know Kev hasn't covered time yet, and that is a section to come in the near future. So I'll keep time a little discreet. But knowing time, London session, 2 o'clock, 5 o'clock approximately, you get your entry for New York session and back into your buy side. That's just one like simple example in my mind. And then you always want to pair it with liquidity, because you can see how I have the sell side mark and then the buy side's over here. And then now we're coming in the New York session. 7:30 starts our session. I'll drop one tidbit on time. Sorry, Kev. We'll drop one tidbit on time. 7:30 starts New York session for the day. And now we can start to look for our trade. Buy side liquidity is taken. Okay. If we're looking to trade off of an inversion fair value gap only, and as Kev's example was, market has to have the fair value gap created. Let me mark that real quick for you. It always has to be created as the fair value gap first. Because in the time, this is all you could see. Market trades lower, but I will give another tidbit about time. Since we trade New York session here in Riptide, we wait to trade after 9:30 open. So we will start to look for our entry after market open. So we would not take this trade here at 9 a.m. only because our main focus is New York session. So after trading lower from the fair value gap into the market open session, which is 9:30, market trades then up to it and showing complete respect of the fair value gap, being confirmed inversion as we leave away to draw back to our sell side, which was London lows. And I believe this was Tuesday, the 2nd July. 950, 1010, macro entry. I'm dropping a little too much sauce on time, I think, right now, bro. But you come into the charts on your lower time frame after tapping into the higher time frame buy side, as Kev already has explained to us. We have the higher time frame. Let's ignore it now. Let's look only at the 1 minute spectrum. When you're looking for fair value gaps, well, they're all over the chart. But when you're looking for an inversion fair value gap, you want to see the price action being respected. And where could that possibly be? Well, this isn't clean, right? But what inversion fair value gap is clean though? This one right here. Cherry pick though? No. Look at time. I'll drop one more sauce about time, and then I think this is gonna be it for the lecture video. I do wanna hop onto the little call together with the server, maybe just talk about inversions a little more. But 10 o'clock, 11 o'clock, it's a key time of day to trade. So if you're starting to look for your trade only after this time, liquidity was taken on the higher time frame that we had marked out in the 5 minute. It's taken. And this is now showing you double confirmation, because you could zoom out and there's many inversion fair value gaps. Because what do we know? Market has to trade back up. Oh, hold on. I apologize for taking that off. So after leaving, right, market left. But as Kev pointed out, optimally, you want to see that little touch back into it. And if we zoom in, this never touched in. So if you have your limit order at the low of the fair value gap to confirm inversion, you never got filled. And we know to wait for New York session, which is after 9:30. And it's right there. There's your tap in to confirm inversion and your reaction that you always want to see if you're speculating an inversion. Tap in the 50%, which is this dash line being respected, no body closure above. The wicks, this is permissible, this is allowed. But the reaction, immediately going lower. That's true confirmation of inversion. Buy side's taken, but this is outside of New York session. Coming into true time of day, I'm dropping a little too much sauce about time. True time of day, 9:30 New York session, to confirm the inversion with the pure respect of the 50%. Now you're taking your short, and optimally, your trade would look like anything like you could target the 50%. I know Kev talked about consequent encroachment, so you come in right here, consequent encroachment. I was off by a tick, sorry. Target 1, that could be it. And that's it, done for the day. But I think that is honestly going to wrap it up. A little touch on inversion. I do want to say though, before I wrap up the segment, anybody watching the video, and if you are a part of Riptide, I would love everybody to share one example this week where you see a buy side liquidity sweep or a sell side liquidity sweep with an inversion entry like we have here, from the fresh week of data to come. And just send it into the Riptide chat in the private inner circle if you are in there. And yeah, that's it.